Yo, what's up, everybody? Day 3 of my swing trading school course. This is going to be an amazing video. This is probably going to be one of the most informative videos and the most important video. This is going to be basically everything about my strategy, just about some simple stuff like trends, price action, volume, the moving averages that I use, ADRs, basically just like the foundation of my breakout strategy. So this isn't going to be everything. There's going to be plenty more videos, but this is going to be the start. So I need you to pay attention. I need you to really understand this. Put up examples on your chart. I need you to write everything down, take screenshots, etc. I need you guys really locked in. This is going to be a super important video. So first things first, I want to go over trends, right? A lot of this may be beginner, so if some of you guys are beginners, you can watch it or you can skip, whatever you want to do. I advise, even if you do know this, just watch it. You know what I mean? So, yeah, number one, I want to talk about trends, right? What is a trend? An uptrend is higher highs and higher lows, right? So an uptrend, you can obviously see a stock that is making higher lows, higher highs, higher lows, higher highs. This is an uptrend. Now, a downtrend is lower highs, lower lows. Hopefully that makes sense, right? An uptrend, downtrend, I'm sure you guys know what that is. Now, yes, I see a lot of people taking reversals. Me personally, I don't like taking reversals. I don't like guessing or predicting these movements. I am a trend line trader. I trade trends. So I think trading with the trend is your best friend. So I do not fight the trend. I only trade in the direction that the strength is showing you, right? So a big upside move or either a big downside move. The best setups are always in clear, obvious uptrends. Super simple. A breakout is going to be in a clear, obvious uptrend. You don't want to overcomplicate your strategies. You don't want to overcomplicate your trading. I think it's very, very important to understand that simple sells, fancy fails, right? Your simple trading is going to make way more money than having a bunch of overcomplicated stuff. So hopefully that makes sense. The next thing I want to talk about is price action, right? Price action is just reading the candlesticks, right? It's super simple. Super, super simple. Like, price action is just basically, what are candlesticks? They're moving. They have volume in it, right? Candlesticks are going to move up and down. So price action is either an uptrend, you have an uptrend, you have consolidation periods, which what that means is a consolidation period is a sideways movement, right? Sideways movement is the stock going sideways. So hopefully that makes sense. Really, just when a stock goes sideways, that's consolidation. This is an uptrend. This is a downtrend. Price action is just the action, how price is moving, right? Super, super simple concepts. It's very, very simple, right? Price action is just how price is moving. Now, volume. Volume is confirmation. I use volume every single day with breakouts. If price moves without volume, it's a weak stock. It's a weak trade. Not something you would want to take. Breakouts with big volume equals institutions and banks are stepping in. That means that a lot of banks, a lot of institutions, and big money are buying the stock or the asset. You want to look for volume in your trading, and that's something you want to pay attention to, is just volume in the market. Big moves are how you get big gains, right? Now, low volume breakouts usually fail. That's one thing that you need to understand. When we are taking breakouts and you don't see too much volume, you don't see a spike in volume and a spike in price action, or a quick move, however I can say it. You know what I mean? That's a weak candlestick. It's a weak volume candle. Not something that you really want to look at. Now, volume dries up during consolidation, then expands when the stock is ready to go. So what that means is, if I can show you guys on the chart, this is what stocks usually do. I like to say that they move in a staircase pattern. They move up like this when they're in an uptrend, right? That's how stocks usually move. In a downtrend, it's kind of like steps, like you're going downstairs, right? Now, let's give an example. There's consolidation periods when you'll have a big upside move, and then price obviously has to sell off, right? Stocks don't go up forever. Assets don't go up forever. People are buying and selling every single day in the marketplace. So when you see an upside move and it starts consolidating, this is where volume is drying out, right? This is the stuff that we're looking for. We actually like volume. This is a lot of volume. This is a consolidation period where there's not a lot of volume and the price is consolidating and moving sideways. So hopefully that makes sense. Very, very simple. Now, the next thing I want to talk about is an ADR. That stands for average daily range. That is something that I use in my breakout trading every single day. The ADR tells me how much a stock actually moves on a daily basis, right? So you could see, I'm going to pull the indicator up. You see this little green number all the way down here. Actually, my face cam is breaking it, or in front of it. You see it right here? This is the ADR. So you're going to see that when I tell you to add the indicator. And let me just explain what the ADR even is. It's an average daily range. So it's when a stock moves on an average, right? The average that this stock moves, which Tesla, let's give an example. Tesla moves at about a 5% ADR. That means that Tesla moves at about 5% daily. So if it goes up, the average accumulated daily range that it will make or that it will go is 5%. Now that doesn't mean that it's capped at 5%. That's just the accumulated average daily range of a stock. Now, when you have a high ADR on a stock, that shows you that that stock moves very, very well. So let's give an example. I'm not going to move my face cam. I'm just going to show you guys. But let's say a stock like, what can I say? Amazon. Amazon has a low ADR. You see how Amazon doesn't have that much momentum? Like, you see how it doesn't make huge moves? It kind of just chops around and slowly goes up. But then if we look at a stock like, let's give an example, ASTS. This has a high ADR. See how the moves are very big? These are the types of stocks that you want to be trading with higher ADRs, because the higher ADR, the bigger the move. The bigger the move, the more money we make, right? Super, super simple. If a stock barely moves, even a perfect breakout setup won't even be that good of a risk to reward. So hopefully that makes sense. I think you guys should study that. Really quick, I want you guys to add 2 indicators to your trading view. You can pause this or do it after. The first indicator, you're going to go to indicators and you're going to type in VOL. It's simply volume. It's going to be right under technicals right here. That is going to show you this indicator down here, right? This shows you the actual volume. These candlesticks down here show you when there's a lot of volume, like this day. See how these 2 days are a lot of volume? The past 2 days have been pretty well, right? Lots of volume. Red day on volume, you can see there was a red day. Even this day, red day, red day. So you want to see a lot of volume when you see your breakouts. That's very, very important. You're going to add the volume indicator. The next indicator, you're going to type in ADR. It's going to be this one under community right here. ADR percent, it's going to be by the Scrutinisher, whatever, however you say that. You're going to add that, and it should be down here. So you can see that the ADR will be down here, and you're going to read, let me move my webcam, this number right here. So every time you go to a stock, you're going to be going on the daily time frame. That's going to show you the average daily range of a stock. You can see if I go to OPAD, the stock has an ADR of 32%. So that's a really high ADR, and you want to pay attention to that. Usually when I'm trading, I look for stocks to be over around 3% for the average daily range. Now, this is just a little bit about my strategy. My strategy is inspired by Mark Minervini, Koala Maggie, Dan Zanger, Jesse Livermore, a lot of those big traders, and it's by experienced screen time, right? I've been doing this for a long time, so obviously I got inspired by myself by recreating my own strategy. Everyone has their own strategy, their own tweaks, their own, you know what I mean? Own things that they like within their strategy. But personally, this strategy that I use is really just inspired by these big traders that trade in the USIC and just big investors. It's built around breakouts, momentum, and catching clean, explosive moves right as they are starting to break out. I'm not trying to predict bottoms or even catch a knife and trying to, you know what I mean, predict movements. What I mean by catching a knife, that means when a stock is falling, it's like if you're catching a knife and you're trying to catch a bounce, you're just guessing, right? So you never want to do that. You don't want to guess. You don't want to try to top tick highs or guess the bottom or take puts or calls for no reason, right? It's very important to understand that you need a strategy. You don't just predict movements, right? I'm not here to do any of that. I want confirmation, I want trend, and I want volume behind my trades and my breakouts. If you guys follow Mark Minervini or Koala Maggie or any of those traders that I've said, you'll realize that I do use a lot of their principles. Like I said, I created my own version, kind of refined it through experience, trial and error, and just hundreds of hours of fucking staring at the charts, right? Very important. Now, the next thing, hopefully this looks good on the screen. You guys can read all this. Took a lot of time on this. So, you see this? You should be able to. So, what I look for in my strat, this is very important. This is the main aspects of my strategy. This isn't a freaking shiny video where I have a bunch of shit flying around the screen showing you these overcomplicated strategies. It's none of that. This is a real deal USIC strategy that's proven from hundreds of years. That's why you don't see a bunch of fucking... You ever watch a YouTube video where there's stuff flying on the screen? This is how you do this. It's not going to be like that. Straight me talking about the data that I've gotten from my strategy, right? So what I look for first in my strategy, right? So before I even think about entering a trade, I need to see a strong move in the market, right? I'm talking about a 15 to even 100% move on a stock before it starts to base flag, or create its wedge. This tells me that there's real momentum behind it. So what that means is stocks move in percentages, right? You can see over here, right? Tesla is up 1.19%. You could see ASTS up 8% today, right? So this is the percentage that a stock makes. So if we give an example on, let's say ASTS, right? You can see that ASTS over here, from these lows, we're going to use the date and price range. From these lows all the way to these highs, you could see that it made a 172% move to the upside. That is a huge upside move. What happened? It pulled back, started creating like a range right here. You can obviously see we have a strong resistance line, and you can see today we actually had a breakout out of that resistance. So if I zoom in right here, lots of resistance right here. You can see we broke out. I actually took this breakout. I'm up $2,000 on the stock so far on these options contracts. So holding it, looking pretty good as of now, and I am swinging this at the moment. You can see it's even following through, looking amazing. So this is a stock that I'm currently in, and you can see this was the breakout, right? So I like to see a huge move on a stock. I like to see a pullback and then breakout. Now, every stock is not going to look like this. We're going to give a bunch of examples in this video, but this is something that I like looking at. Also, something that you want to pay attention to. I don't always look for huge moves up and then pullbacks, right? That's just for a bull flag or a setup like that. Now, there are setups on stocks that they'll create wedges like this. I'm going to go over it, but see how there's not like an insane move up on the stock from these lows right here to that high? It made a 50% move up, but it's not like a straight move up, right? So when you see a wedge like this, you can still take a breakout like this, and it still works out a lot of the times. For the most part, when I'm looking for that 15 to 100% move up, that's usually for bull flags, so pay attention to that. Now, after that big move, I want the stock to go sideways. I want the stock to tighten up, slow down, decrease in volume, and I want it to set up for that next leg, and that's where I'm looking for my entry, right? So like I said earlier, what do stocks move like? They move like staircases. They go up, they go sideways, and then they go up again. This is your step. So this is usually the consolidation area in a stock. This is the big move up. We're looking to take a stock right at breakout to catch this exponential move to then our stop loss would only be right here. So look at that risk to reward. If we pull out the, whatever this tool is called, the long position, you can see this is a pretty good risk to reward, right? We're risking this to make all of this and continue if it continues to go up. So it's a good risk to reward strategy. I think it's amazing, and I think that that's what you want to pay attention to. Moves up, they go sideways, they tighten up, they decrease in volume, and they go higher. So if we go back to the charts, you could see, let's just look, right? Lots of volume up here, right? Lots of volume, volume decreases. Also, if we look at the volume indicator, volume decreased, right? Until right here, this day, we had a decent amount of volume, and it actually broke out. So hopefully that makes sense. You want to look for a lot of volume to dry out and decrease, and then you want to look for explosive volume out of that. So let's give an example, like the breakout I took today. See how volume was decreasing, and we had low volume down here, and then the past 2 days, lots of volume. You could see an increase in volume, and that's where we take our breakouts. So the next thing I want to talk about is the key technical criteria, right? I use the 10-day moving average, the 20-day moving average, and the 200-day moving average, right? Now, most of my stocks, I would say a good 80% of them, they have to be above the 200-day moving average. If it's not, I really don't care how nice the pattern looks. What that means is if the stock is under the 200-day moving average, it means it's in a downtrend. So if we turn on my 200-day moving average, you can see it's the blue line. We're above it, right? We're plenty above it. That means the stock is super bullish. But if we go on a stock like Lululemon, I think that's in a downtrend, right? So Lululemon in a downtrend. If we turn on the 200, see how we're way below the 200? So that means if a stock is in a downtrend, it's less likely to break out if it's not in an uptrend. So most of the time, I'd say a good 80% of the time, I like to see stocks that are above the 200-day moving average because it tells me that we are in an uptrend and that it looks like it could go higher, right? Breakouts, we want stocks to go higher. That's our main goal with this. So it has to be above the 200, and then my average daily range, the stock must be at least ideally over 2 to 3%. More over 3%, but sometimes I'll take a lower stock that's like 2.8, 2.9. if that makes sense. But most of the time, the stocks that I'm taking, they have to have an average daily range of about over 3% in order for me to take it, right? What else does it say? If I take a stock that doesn't move, I'm not going to capitalize off of it, right? Very important. There's no point in trading a stock that doesn't move. I need a range for my options contracts to pay. I use the 10 and the 20 as a guide, and I want to see the stock holding these levels during the consolidation. When price rides to the 10-day and volume kicks in, that's money. That's where we usually see the breakout happen. So if we do go on a stock, right? By the way, actually, scratch this real quick. I need you to add these indicators, right? So you're going to search up moving average, right? Now it's going to be the very first one, or this is my favorite actually, it's going to be the second one. So it's going to be moving average exponential. You're going to add 2 of those. Now you're going to add 1, you're going to go to it, you're going to go to inputs, length, and you're going to change it to 10. You're going to add another 1, and you're going to change it to 20. That is the 10 EMA and the 20 EMA. Now the SMA, which is a simple moving average, doesn't really matter. You can do the SMA, which is going to be the simple moving out. So where's it at? Where it's, yeah, simple moving average. Which one is it? Simple. The simple moving averages right here. So simple moving averages, or you can use an EMA, whatever. It's literally the same exact thing. It's just the length of the moving average, and then you're going to use it to 200. So you're going to have the 10, the 20, and the 200. If we look at the 10 and the 20, we are looking for price to be above the 10 and the 20. So what a moving average is basically a support for price. That's how I like to look at it. When we are below the moving average, that is bearish. When we're above the moving averages, that is a bullish price in stock, right? So you can see how we're below the moving averages, which is the 10 and the 20. I don't know why the 20 is not showing, or the 10. It's loading. Give it 1 second. Don't know why it's taking so long. You can see it's loading up here. I want to give you guys, there we go. So, okay. So you can see these are the moving averages. The key moving averages are the lines on the screen, right? The red line and the green line. The green line is the 10-day moving average. The red line is the 20-day moving average. So you can see when we are bearish in price, we are below the moving averages. But when we get above the moving averages, this is a bullish price action, right? This is a bullish price range. So you can see on NVTS, right, we make a big upside move right here, a 50% move up. We start moving sideways, volume decreases, and then we break out on this day. This is the breakout day, and you could see you would have held that the whole entire time. So what we're looking for with these moving averages is we want to see price above the moving averages. If price is below the moving averages, like I said, it's a bearish stock. You don't want to take a breakout on a stock that is below the moving averages. I'm currently in the stock NVTS, and I want to show you the breakout, right? So you can see this has a super tight wedge right here, right? We're below the moving averages. We consolidate. We make a move up into this resistance again. We get above the moving averages, break out, and now you can see we're heading higher. I'm currently up pretty nice on this stock. You can see, broke out, got above the moving averages. Stock looks really good, right? You want to see it above the moving averages with volume. I think that's very, very important for our strategy, and it's something you have to pay attention to. So if we go on a daily time frame, and most of the time you're going to be on the daily, right? Go to any stock. Go to the stock Amazon, right? When the stock Amazon is above the key moving averages, I don't know why it's taking so long to load. You can't see the 20. You can see the 10-day though. See, when we're above the 10-day, we're bullish. And then we get below the moving averages, we are bearish. Like I said, remember, once we're above them, that's when you usually want to take our stocks. I think that's very, very important. You want to make sure that we are above the moving averages. It's a support level, basically. So hopefully that makes sense. That's my take on moving averages. Now, the setups I like to trade. I like to trade wedges, right? Price gets tighter and tighter after a strong move, pulls back with a very steep pullback. You'll often see volume drying out, the moving averages catching up, whether it's underneath or above, right? You'll see just a wedge. So I'm going to explain what a wedge looks like really quick, right? So you'll see whether it's an upside move or even like a downside move, right? You can see both of them, a falling wedge, rising wedge. There's a bunch of wedges. So you can see this is what a falling wedge will look like. An upside move on a stock, a pullback, a strong pullback, and then it consolidates, right? This is what a wedge looks like. So you're going to look at it like this. That's what a wedge looks like. And once you see the breakout out of the wedge, that's going to be your entry. And you can take the big upside move. Hopefully that makes sense. That's what a wedge usually looks like. You also have wedges where, you know what I mean? It's an upside move. and it's going like this, you know what I mean? Like a rising wedge. You have these, and then you can catch the breakout like this. But most of the time, I'm catching falling wedges. So if we give an example on NVTS, right? Yep, this was a wedge. You can see this was a nice wedge right here. If I can delete everything, you can see that like right here, you see how the stock makes a big move up and then just pulls back super, super hard. You could have taken it all the way down here for this breakout. See how it's a super tight wedge, pulls back, volume dries out, you know what I mean? We're consolidating, and then boom, starts the breakout. Now it's ripping out of the wedge. You're catching the breakout around this area for the upside move. That is a wedge. Now, where did I leave off at? See volume drying up. Yeah, so when it breaks with volume, that's where I usually look for my entry. Now, a bull flag, it's a quick move up, short pullback, tight range. Usually around 3 to 7 days is what I'm looking at for the consolidation period, and then the blast through with volume. So let's show you what a bull flag looks like. I'm going to give an example on NEO. I think this is a nice bull flag pattern. What do flags look like? You know what I mean? Here's the flagpole, and then it looks like something like this, right? That's what a flag usually looks like an American flag, right? American flag right here. You can use that for price range. So if we look at NEO, if I can go into replay mode real quick, you can see NEO makes what? From these lows, a huge move up, about a 55% move up, starts pulling back, you know what I mean? Creates this flag right here, bang, breaks out, and then goes way higher. I caught this for about 300%. I made over $10,000 on this trade because I took the breakout down here and took it for all the way up there. And this is on a daily time frame, mind you. So if we go to like an hourly time frame, look how big that move up was. Huge move up on this stock, broke out of the flag. We caught it from all the way up at this top for about 300%. So that's what a bull flag looks like. And then a tight range and a base setup. I'm going to show you what that looks like. If we go to Apple right here, look at this base. Right? So you can see, this is what a base looks like. See how we just have a consolidation period? It usually looks like something like this. Consolidation, and then you break above this resistance, and then your support is down here. Bang, breakout for the continuation higher. That is what a base breakout looks like. And you can see this is a base breakout. You would have taken it on this day, and you can see the follow through was beautiful to target these highs up here. Beautiful base breakout, insane move, has a lot more room to run, right? That's a stock that you want to take. Very, very important. So those are the 3 patterns that I like to trade. I'm going to mark it out one more time to show you guys. You have your falling wedges, which is a downtrend or even like a big move up on a stock, and it pulls back. You have a tight wedge. Then you have the bull flag like this. Oops, not perfect, obviously, but you have your bull flags, and then you have your base setups, right? So that's like the 3 main stocks that I like to take, or the patterns that I like to take. Bull flags, wedges, and bases. Hopefully that makes sense. I hope you guys are really paying attention. I know I said that like 40 times, but I'm trying my best to explain this to you guys. I'm so bad at explaining this beginner stuff, but you got to do what you got to do. I want you guys to win, and I'm more of a better explainer with technical analysis and like the actual charts. Once we get into like the more advanced stuff, you guys are going to kick it, man. I'm glad you guys are learning and spending time, especially if you're watching 23 minutes into this video. You're doing great, bro. So hopefully this is all making sense. Now, let's go through my entry rules, right? You guys know what a bull flag looks like, a wedge, a base. You know what the indicators are. You know what volume is. You know what price action is. You know what the main criteria is, right? Before I go into the entry, what's the main criteria, if you remember, right? What it is you want to see a big move up on a stock, right? You want to see a stock have a consolidation period, get super tight, dry out in volume, and then you want to see the break above for it to go higher. For a wedge, it's something like this, right? Pulls back, gets super tight on it. And mind you, this is all on a daily or a weekly time frame, guys. I hope you are paying attention to that, the time frames. I'm always looking at my breakouts on a daily time frame. So here's the wedge. That's what a wedge breakout looks like. A base breakout is something like this. You have your resistance, breakout for it to go higher. So you can screenshot that. You can write it in your journal, whatever. Those are the main patterns that I'm looking for. Usually I'm looking for a big move up around 15 to 100% around, and then obviously for it to start consolidating. It doesn't always have to be 100% move up or a 30-40% move up. Sometimes you'll have small moves up, but it has to be in a good stock. Remember, you don't want to trade random stocks like OnlyFans that has a 1% ADR. You want to trade a stock that has momentum, that's in an uptrend. Remember, it has to be above the 10, the 20, and the 200-day moving averages. So it has to be a big move up, has to be above the moving averages, and it has to actually be a good stock. Now, in another video, I'll go over how to identify good stocks from bad stocks. So this is just the main criteria for our entries and the whole breakout strategy. So now let's get into the entry rules, right? I wait for an actual breakout, no guessing before it breaks out, no hoping, none of that. I enter off of volume confirmation through resistance. I usually place my stop loss at around negative 25% or at low of day, depending on how volatile your contracts are and which expiration you took. Or I usually put it to like closest support if we break below, depending on the setup. So I like looking at the first 30 minutes of market open for a lot of volume, or I'll add throughout the day or like towards end of the day. Now, usually my entries are always around the same. It's usually a 5-minute close above my breakout level. So a 5-minute candle close above breakout level. Let's go over some setups. Let's go over some examples. Let's get into it. This is the fun part. So right here on, let's just do, what's a good entry that I took? I want to give like a perfect entry. Remember, it's not always going to be perfect, but okay. This is actually a good entry. So RR, the stock RR. What kind of setup is this? Do you guys remember? It's a wedge, right? You can see, even on the weekly, like we have, or you can call it like sort of a bull flag up here, kind of, but it's kind of like a tight, you know what I mean, wedge. A higher time frame wedge, like a monthly wedge and a weekly wedge. And you can see, right, you have your trend line, you see the resistance, and you see the daily, right? This was breakout day right here. Let's go in replay mode. See this candlestick right here? This is breakout day. What do you notice about this? This is a huge gainer on this day. Also, a lot of volume. What happened? Big upside move, pulls back to the key moving averages, starts going higher, getting tight. You can see we have our trend line. Boom, lots of volume after the decrease of volume. We have an increase of volume on this day. This is a day where you would want to swing this, right? So let's go to the 5-minute time frame on the stock where the market opened. On this day, this is where it broke out. You could see price opened at 9:30 a.m., which is right here. Made a big move up, but left behind this wick. I don't think I would enter on that, even though it did kind of close above our breakout level. I don't like that wick, so I wouldn't have entered there. You could see it pulled back, and then we had a big move up. Bang, 5-minute candle closure. You could have entered right there, right? This is your entry, stop loss at low of day for the most part, depending on which contracts you pick, obviously. You should not be getting stopped out on a little move behind like this because obviously you're picking like 2 weeks to a month out contracts. So you could see, big move up, you would have entered on this 5-minute candle closure right as price approached our breakout level. Now, our breakout level is this white line. This is the trend from all the way back here, right? Rejected here, rejected here, rejected here. Now you can see this is the day that we're trying to get above it. We kind of fail. We have no volume on this. I mean, we do have volume and we closed, but it's not a good closure. You want to pay attention to price action and the candlesticks. This is a good closure right here. When you see a candlestick that closes with no wicks, like barely any wicks, that's a good candle closure. When you see a candle that closes like this, but leaves behind a huge sell wick, that's not the best candle closure. It's very important for you guys to pay attention to the candles and how they close and how bullish they are. So you can see, look how this candle closed right here. Not too much of a wick, a sell wick. You can see buyers are super bullish on this candle. Could have entered right there, bang, you could see, and it just ended up ripping, pulled back, and that's perfectly fine. You're going to have pullbacks. Your stop loss is usually going to be at low of day down here, or like negative 25%. And you could see for the rest of the day, this absolutely rallied. Right? So if we just go on like a 30-minute time frame, you can see the rest of the day it rallied. The next day, you can see it went even higher. The next day, pretty sure went even higher, right? So you could see like it's just slowly climbing up. And today, which was right on the next day, excuse me, right here is today, which I made a lot of my money off of. So you can see I would have taken that on the 5-minute candle closure as soon as we got above breakout level and my stop loss is down here. So already look at the risk to reward. This is what our risk would have been near low of day. This is the reward. This is what a real risk to reward setup looks like. We're not trying to target this and lose this. We want to lose this and make this. You know what I mean? That is how you're going to win a lot of money in the market. That's how you're going to compound and grow your account. I feel like a lot of people try to scalp, and there's nothing wrong with scalping. Nothing wrong with day trading. I just don't like day trading, and I don't think that any of these USIC traders, any Wall Street traders, any of the biggest traders are day trading. A lot of them are long-term investing and swing trading these stocks that are going higher. That is what the stock market is supposed to do. It's an asset. Assets are supposed to appreciate. It's very important to realize that. So that was my entry on that. Now let's go to ASTS, right? ASTS was a complicated entry today. So this is going to be a challenging one to show, but I'm going to show you it because trading is not perfect and you're not going to get perfect entries every day. So let me delete my drawings all back here. Look, big upside move on ASTS, starts pulling back. Remember, gets below the moving averages on a daily, starts to get above. Bang, breaks out with a lot of volume today. I literally took this stock today as I'm making this video. So you could see market opened and kind of dumped back to our breakout level, right? Remember, this white trend line is our trend, our resistance. We want to see it get above that. This gray right here, this is when market was closed. So this was after market, the overnight, and pre-market right here. You don't really care about that. You want to make sure that obviously you're trading market open. We can't trade back here in the gray. We can only trade in the black. So these are the days that the market are actually open. The gray is the overnight session, right? Market in the stock market is only open from 9:30 Eastern AM to 4 p.m. Eastern. So you could see market opened, and what happened? We kind of tanked. Let me a second. We kind of tanked below breakout level at market open. Remember, this first red candle is when the market in the stock market opened. Stock market opened, we tanked back to the breakout level. We bounced off of it. And you might say, Johnny, why aren't you taking it right here? If we bounce, then it's looking good and it's above breakout level because we're below the moving averages. Remember, whether that's on a 1 hour, 2, 5 hour, 20 hour, doesn't matter what time frame it is. You always want to make sure that price is above the moving averages for you to take it. You want to watch for volume, right? So you could see ASTS had a boom, big candlestick right here. And look what happened. Bang, closed right above the moving averages. That was my entry today. Right around here, my stop loss would go back into the range. And you can see today we ended up pulling back a little bit. We actually pulled back and just kind of sat here in drawdown for a little while. And then end of the day, absolutely ripped. And this is currently where we're sitting at. So as of now, the stock is looking amazing. I'm holding this and I'm swinging this and I'm targeting all of these highs over here for my targets and for my TP. We want the stock to continue to go higher because what does it do? Stocks are supposed to go higher. That's what this stock did when it broke out. Look, broke out, went higher, broke out, went higher, broke out even right here, went higher. So we're looking for another big move like that on the stock for it to go higher. Now my entry would be a 5-minute candle close above the moving averages and above breakout level, which is right there. Or sometimes you can look for pullbacks, right? So here's another entry you could have taken on this because I have two types of entries. Usually the 5-minute close or a 5-minute pullback. Or you can enter on 1-minute candle closes, but the win rate on those are significantly less than waiting for a 5-minute candle close. So you could see candle close. If you think this is too high, look, we got a mini pullback right here. See how this pulled back to the moving averages? Bang, you could have entered all the way down here for a better entry. And then look, you got the best entry instead of on the closure. But sometimes stocks do not pull back. Let's give Tesla today for an example. Tesla had a good breakout. Here's another example. Stock goes all the way up, starts moving sideways right here. Breakout level would have been above this high all the way up here. If we go to a 5-minute time frame, see how we make a big move up. We start consolidating and chopping. Remember, stocks move in a staircase pattern. So they chop, they go higher. That's what we're looking for. You can see my green line is my breakout level. We could have waited for a 5-minute candle close right here. Bang, you would have entered right there. Or let's say if you were a little less confident and you waited for a pullback because you didn't like the entry, look, there's no freaking pullback at all. And then by the time it pulls back today, I'm pretty sure the stock actually failed. Look, and then it ended up failing. So this is a stock that actually ended up kind of failing. Yes, it didn't have, it's still closed, but that's a bad candle closure for a swing. I can't even lie. It still could look good, but you don't usually want to see a stock pull all the way back that hard. You want to see it hold and maintain its strength. That's usually where you're taking it. So hopefully that makes sense. You see the 5-minute candle close, super bullish, also lots of volume. That's where you would have taken it. You can see you would have risked this or this to make this. That's a valid risk to reward, and obviously we would have wanted the stock to continue, but it did crash. And what you can do in a situation like this is just put your stop loss at break even to make it a risk-free trade. So if it does pull all the way back, you just exit the trade. You take your little bit of profit from trimming up here, and then you just move on with your day. You don't swing it. That's a stock that you usually are not going to want to swing. But besides that, I hope you guys enjoy this video. I don't have really too much. That's all I wrote up for you guys. This is the main just like key points to my strategy, right? I hope you understood all of that. Remember, we're looking at the main criteria, the moving averages. We're looking at an ADR. We're looking at good stocks that make big upside moves, stocks that pull back, and then we're looking for that next leg up. I'm going to give 3 more examples before I end this video because I want to make sure that you guys are super locked in. We're going to look together and look for entries. So a stock like BMNR. This is a stock that I took right. Actually, no, let's not go over BMNR. Let's go over my first trade on NEO because this is actually a really good breakout. Let me delete all my drawings over here. So you can see NEO, this stock, looking at it on a monthly time frame, in a downtrend, but starting to get above the moving averages and starting to actually look good. Look at the weekly as well. You can see the weekly started to pick up right here, gain some momentum. The stock's actually moving. That's what you want to see. So after a big move up like this, right? Big move up like this, let's measure it really quick from the low to the high. We made about a 55% move up on the stock. Big move up on a stock, starts pulling back and starts creating a base right here. So you can see we create this nice base after making that big move up. And you can see, bang, this day was breakout day. So let's see how we could have gotten an entry on this day on NEO. Go to the 5-minute time frame. Market open, it was this day, right? Yep, this day. So my trading view has been super laggy, so like the charts don't look that good. But you can see, let's just give an example, right? The white line is my breakout level. You can see market opened on this candle. You can see all the way down here, 9:30 a.m., right? So market opened, made a big upside move, candle closed, bang, that's my entry. Stop loss goes to low of day, and you can see it absolutely ripped for the rest of the day. Closed pretty high up here. The next day, gapped up, and what did it do? Continued to ran. So look at that risk to reward. I entered all the way down here. You would have been making this whole entire trade. Make this a little bit more green. You can see this is the risk to reward. Look at that. You're risking this gray part to make all of this. And I caught this stock for over 400%. Look at that breakout, right? From all the way down here, you can see it ripped all the way to the highs. And obviously I closed up here because, you know what I mean, my expiration ended. But yeah, that's a stock that was really good. 5-minute candle close. Super, super simple. Let's go to HIMS down here. Show you on the daily time frame. Now, this is a base setup that actually came off of support. It wasn't a huge move up. So you can see, if we look at HIMS, right? Overall, pretty decent stock, making a big move up, but then also crashed right here, right? Had a big crash, but came to support. Support is when a level is bouncing. Pulls back to that same level, bounces 1 time, bounces 2 times, bounces 3 times. This is a key support level. So price bounced at this support level right here on HIMS, right? Bounced up. What do we see though right here? We see a nice base. So if I look at it like this, see this base right here? See how we have our support and we have our key resistance up here. We started to make a move up and we broke out on this day right here with this huge volume candlestick. These are the days where you want to actually swing, right? Like this right here. See how we had a decrease in volume, and then on this day, an increase in volume. That's showing you that there's a lot of volume in this stock. Let's go to a 5-minute time frame to find our entry. This is breakout level right here. And you can see price opened all the way down here at 9:30. Made a huge move up. Now this 5-minute candle closed all the way up here. This is an example of kind of like how we're too high, right? If the market opened all the way down here and we just pump all the way up, you can see this is pretty extended. It's also extended from the moving averages. You want to make sure that you're paying attention to when a stock is too high or even too low. You know what I mean? That's very important. If we're too high on a stock, why would you take it at the very highs up here? So what you can do is you can wait for it to pull back. See how it pulled back to the moving averages? Because remember, the moving averages are always going to trail price. Sometimes you'll see a stock just rocket ship up, and if you miss it, you miss it. It's better to wait and to get a better risk to reward than forcing a trade all the way up at these highs with this 5-minute candle close. So I waited for the pullback on this, waited for it to break back above. I actually think I entered right on this candlestick right here. Bang, 5-minute candle close, stop loss back in the range. What did the stock do? Ended up rallying. As soon as we got above our breakout level and above that base, waited for the pullback, waited for it to bounce, and you can see after that, history repeats itself, and the stock just kept going higher and higher and higher. You can see I'm still in the stock, and it never broke below the 10-day moving average. If they can load, trading view's been so slow today. See the moving averages, we never broke below the moving averages. So held the stock the whole entire time. We bounced off it every time, and the stock is continuing to go higher. I'm up about 100% on this because I did take 3-month out contracts. This was more of like a long-term swing trade. But yeah, this was a beautiful setup, a beautiful base setup down here. You can see, delete this, put the green line. Beautiful base setup, broke out, and kept going higher and higher and higher. That's the end of this video. I really hope you guys enjoyed that. This is the main key concepts on my strategy. And yeah, I hope you guys are making it to the end of this video and really studying and watching. If you made it to the end of this video, I want you to comment, "I will master breakouts," in all caps in the comment section. I will master breakouts. And under that, I want you to put how productive you've been. 1 out of 10. Have you been working? Like, have you been really studying this and really putting in action, trading every day, waking up, going to the gym, mastering your habits, mastering your mindset, reading, journaling, becoming a better person overall? I think that's very important in order to study these setups, in order to, you know what I mean, be a sponge to these setups. Remember, trading isn't all about just making money or watching a couple YouTube videos. It's about becoming a disciplined person. No successful people just study charts and have a terrible lifestyle, right? They have a super strict routine. They have a systematic approach to their life, the same way that I have a systematic approach to my trading. That's how you're gonna become successful. Leave a comment in the comment sections. Make sure to like this video if you did like this video, like that ass. Go like it real quick, come on. All right, cool, thanks. I appreciate you for liking it. And yeah, that's all I got for you guys today. 40-minute video today. Really, really informative video. And yeah, see you guys in day 4. Let's get it.